back on Radio Entrepreneurs. My name is Rich Hirschen. Today I am joined by Nathan Gobes of Radio Entrepreneurs. Nathan?
Thanks, Rich. It's wonderful to be here.
It's great to be here. We are broadcasting live from Gray Gray in Canton, Massachusetts. And so we're very excited about our next guest. Nathan, I'm particularly excited because he has voiceover training and his son has a recording studio. So I think our next guest is going to be excellent on this show. They're all excellent, but he in particular is going to be
probably
very
the first one that's ever walked in and asked, "What kind of mics are you using?"
Well, you know what? It's a natural question.
Yeah.
Some people sound better in front of certain mics and not so well, and good in front of others. So
well, hopefully this is one that makes you sound good.
These are the best.
Without further ado, this is Dan Crowley from Business Capital Resources, and welcome to our show.
Yeah, it's great to be here. I'm excited. I feel like a mosquito in a nudist colony. I don't know where to start.
Well, hopefully you don't have triple E.
Wow.
So tell us about Business Capital Resources. What do you do?
We are a long-term consultancy into banks, banking associations, the financing markets. We also happen to be the correspondent in certain select premium channels of financing for the largest Fannie Mae, HUD, FHA, Freddie Mac lender in the country.
Wow.
So everything from the finance side to the advisory side to the common sense side, which is where we're spending a lot of our time right now, helping people make sense of where are they in the cycle to do with real estate and real estate finance.
And is this a company that you founded?
Yes.
And what got you into this business or made you decide to found the company?
Well, actually, I came out of investment banking, and I made what seemed to be a logical leap from financing the equity side of real estate into the debt side. In fact, one of my clients was the chief executive officer for one of the largest mortgage companies affiliated with a bank back in the 80s. I had helped shelter a lot of his income through government-subsidized partnerships, and he said, if you can do the equity piece, you can jump into debt. And I jumped into debt at just the wrong time. It was 1987, early 88, and it was about a year or so before the economic S&L doo-doo began to hit the fan.
Yeah. And that was Business Capital Resources you started?
No, actually, that was Funding Presentation Systems was the first company that I launched. And it was designed to actually help make sense of the failed portfolios that were inside of the banks. Did a lot of work scrubbing deals to find out forensically why they didn't work.
That's good information.
And it actually ended up becoming a persistent reason for being out there in the market, trying to bring things up to the next level.
Mm-hmm. And then when did you found this business, right after that?
I went back and took an important sip of the banking Kool-Aid after the first S&L crisis by spending a number of years at Bank Boston and then ultimately Fleet Boston before reemerging in the market under the brand Business Capital Resources. And the reason for doing so was simply to get reacquainted with the terra firma. What were the rules? What were people actually doing out in the marketplace relative to banks? During my post-S&L experience, was actually one of the first correspondents for the first funding commercial conduit in the country. And that was an important piece of business to be conducting back then. But it had morphed into being other things. And as we know, it morphed into being some terrible things as we progressed into the 05, 06, 07 sector. So the reasons for going back into the market were, first, normal commerce, place loans, help clients, make sense of everything. And then it became, how do we turn this into a rescue mission? How are we going to course correct to make it sensible for people to really understand where they're at in the safety cycle? We're in that same cycle right now. And people are really up to speed with where they are in relationship to the bubble. And there is a bubble.
When's
Make
it
no
coming?
mistake about it. It's happening.
Yeah.
It's happening right now, and it's happening deal by deal, loan by loan. And it's really important for clients to understand relative to what would be an exit strategy, where are they relative to that bubble? Are they in the bubble? Are they watching the bubble? Are they approaching the bubble? But it's happening. Loan mods are up. When loan mods go up in what I consider to be the prime sector of finance, it's a little bit of a concern. And so I'm getting reports from people that are out in the field that they're starting to see loan mods increase. And it's not just in the 1 through 4 family sector. My focus is commercial. And it's starting to happen because some of the same products that contributed to the downturn in 07, 08, 09 have been rebranded with new fancy names. They've thrown the new, some new vernacular at it. It's the same garbage.
So we're not really learning our lessons, are we? We're just
Not
sort
rapidly,
of relaunching
not nearly
them.
rapidly enough.
Yeah.
It's frankly, it bothers me. It keeps me awake at night. And people really need to understand that just because a financing source has said yes to doing your financing, rule number one is if it's a good deal for the bank, it should be a good deal for you, a great deal for you, because of the buffers that are inherent in an underwriting. But is it really a bank that's saying yes? And how far have they departed in the way that they're saying yes from what good, solid, strict underwriting would recognize as being solid and strict in adherence to either the FDIC, OCC, or the NCUA, any one of the three. And the minute you start to see blended underwriting, where when the normal debt service characteristics of a loan begin to wane and they back up the failing elements of the deal with a 1003 application, nope, wrong, don't do it. And be adult enough to realize you're facing that kind of a tough decision. It's kind of like musical chairs right now. And we all grew up playing musical chairs. It was great. But what if halfway through the game changed? Would you play the game the same way? I mean, musical chairs, line up 5 kids, give them 4 chairs. The last one with a chair wins. Well, what if by chair 3, somebody had attached a cake of C4 to the bottom of the chair? Would you play the game the same way? The fact is, you wouldn't.
Yeah.
You just wouldn't do it.
Right.
Well, this is what's happening right now, except people don't realize that the cake of C4 has been attached to the deal they already did. Only thing we can do is try to modify it early or try to help them avoid doing that going forward. So we can't, some people ask for forgiveness, other people ask for permission. And unfortunately, all too many people during the last cycle asked for forgiveness. And it was way too late.
Sounds like
So-
a lot of people are going to be left without a chair when this music stops.
Unfortunately, it could be, but there's time. There's time. We did come out of that with a lingering intellect of people who experienced it, who are still around, which is great. So the knowledge base of folks that know the difference exists. Not everybody retired or were driven out of the banking business. It just didn't happen. In the late 80s, enough time had passed where the later part of the first decade, a lot of that knowledge had been weaned out of the market. It retired, it got sick and tired of doing it, whatever it might have been.
Yeah.
Right now, the gap is shorter so that there's a little more protectionist attitude. People need to think defensively. It's not all, rose and wine. I mean, you've got to be careful.
So you're a veteran of the banking industry. You've been in this, sounds like your whole career, or just
Certain
about all
people
of
would
it?
say that in fact, one of my dear friends, Brian D'Amico, who in fact I had you talk to, Brian said that when most kids were, growing up and wanting to be a fireman, I wanted to be a commercial loan officer. So
Banking in your blood.
It really wasn't banking in the sense that I'm in it today, but it was the finance world. It's kind of in my blood.
And how has the industry changed? I mean, in some respects, sounds like really haven't changed at all. But I imagine with new technologies and computer software, how has the business changed from when you started to where it's at now?
Everything's faster.
Yeah.
Everything is, there's an anticipation and an expectation of instancy with decision making. That's not always the best thing, because you'd like to be able to carefully consider what you're doing. But in terms of the normal convenience items, things that you wouldn't put into the umbrella quotes, the air quotes of being, critical financial decisions. But, the pedestrian, rudimentary consumer type financing, I think that's terrific. I think that anytime you can do it faster, more economically, and still get your point across and still get the service and value that you desire, I think it's fabulous. But there is need for growth and room to grow when it comes to people understanding the underpinnings of common sense when it comes to making that larger transaction. I mean, one of the reasons that I love working in the area of strict commercial banking and working with government-insured financing is that those are the safe havens of underwriting and investment thought. You don't see too many banks these days going out of business. You don't see the FDIC and the FBI showing up on a Friday afternoon with busloads of people to go in and take over a bank. That's one of the good things. There were a lot of those back in the late 80s. There were, unfortunately, all too many of them when we had the failures back in 08, 09. And they haven't started rolling up yet because I think a lot was learned at the institutional level. It's a much stricter environment. And if folks would just learn to try and emulate the mindset of a credible commercial lending source, someone with real skin in the game, someone who doesn't want to own your loan and doesn't want to own the underlying asset, that they'll be better off. And the technology side of that is delivering the ability for you to really learn how they think. Commercial Loan Success is one of the software products that's out there that we designed, and it's built on a reasonable thinking. It's built on the understanding that banks stay in business for a reason because they're careful. Mm-hmm. Be just as careful. They say no. Don't
There's
go
a
looking
reason
for
why
someone to
they're
say
saying no.
yes.
Yep.
Learn from no.
Yeah.
I mean, be adult enough to want to know why they said no, because it could save your financial future.
Yeah. Well, that's certainly some very good advice. So we're talking with Dan Crowley of Business Capital Resources. Dan, if anyone wants to get a hold of you, how would they do that?
Easy. 508-380-6404, my direct 24/7 line. Write to me at dan@bcrworks.com. New announcements, new technology, new products, new learning are going to be coming out very, very soon.
Great.
That's great. Well, we appreciate you spending some time with us today. It's been great learning about your business and the industry. And we're going to take a break. This is Radio Entrepreneurs.
Thanks, guys.